Good morning, guys. This is Mr. Chalk here. If you're watching this, you are definitely at the right place. Please don't forget to subscribe to our YouTube channel by clicking that subscribe button down there. And I promise you that will make your academic problems of accounting a thing of the past. In this morning's accounting lesson, we're going to be doing a statement of comprehensive income as well as the balance sheet. And at the end of this lesson, you should be able to prepare these items on your own. Okay, so here we are required to do the income statement and the statement of financial position at the same time. So the best way to build income statement and balance sheet is to always make sure that you know how to record simultaneously. Okay, so we're going to start with the information that we have. I'll firstly look at the format of our balance sheet. So now, in terms of our balance sheet, remember our formats must have, in our format, we must have, you need to make sure that you complete it first so that it becomes easy for you. And we have under non-current assets, we'll have fixed assets, then we'd have financial assets, and then under current assets we would have our inventory, and then under we would have trade and other payables, and also cash and cash equivalents. Are we together? And then after this, under shareholders equity, would have ordinary share capital, and then we would also have our retained income. Then under non-current liabilities, we would have our loan. And then under current liabilities, we would have trade and other payables, would have short-term loan. And then we will also have short-term loan, and then would have shareholders for dividends. Shareholders for dividends. I hope this makes sense. And then from there, we will also have something else. But remember, we are going to be controlled by our information. So when you do this, I suggest that when you do your information, always start, when you do your income statement, start with the easiest information that we have. So here, number one, from the trial balance in the amounts for this year, we have retained income, which is 1,038,408. So I'm going to write it 1,038,480. Let me confirm. 1,038,480, and then we have the loan, which is 1,624,000. So I'll put it here, 1,624,000. And then after this, we have the tax control for 480,390. So under trade and other pay receivables, we'll have 480,390. So I'm going to put it 480,390. Then we are done with that. And then provision for bad debts would wait a bit. And then trading stock, if you wait a bit, because they will give you trading stock from the adjustment. So this one you can wait for now. Okay. And then under SARS income tax, you also wait, because you need to go to the adjustments and compare it to your the one that the income statement shows. And then we have creditors control of 1,024,565. So creditors control would have 1,024,000. Let me check, 1,024,565. Okay. And then from there, we check what else we have. Sales was entered, cost of sales was entered. We check directors fees, 1,307,840. So directors fees in the income statement was not entered. So I'm going to enter it. Directors fees, 1,307,000. 1,307,840. Okay. And then from there, what else do we have? We have rent income for 258,300. It comes here, we know. Rent income 258,300. Okay, and then from there we have audit fees for 69,720. So they will come here, our audit fees. So audit fees would have 69,720. Okay, and then after this we have stationery for 68,300. So write it here. Stationery, it's 68,300. Let me see. Okay, and then dividends on ordinary shares, guys, this one you don't record it in the income statement, but you will use it when you look for your declared if it's not given. Okay, and then from there we are done with the information. So let's get what they are saying. The first adjustment says commission income for the year has been received in full at the rate of 4% of total sales. So what they mean here, what they're telling us is that commission income, it should be 4% of our sales. So what we need to do, we need to look 4% for 4% of our sales. And if you remember here, our commission income it's 5 o'clock. So if you look at this, commission income is supposed to be 4% of your sales. So you are going to say 4 divided by 100 times 20 million and 35,000. Then it will give us our commission income. So let's see. 4 divided by 100 times 20 million and 35,000. So we are getting 801,400. So we'll have that 801,400 here. Okay, then you are done with adjustment number 1. Now remember here, none of it is owed, so you can include it in the balance sheet. Then the next item says that only 2/3 of the audit fees were paid. The balance will be paid in March. So once they say something will be paid, it means it does not be paid. So we are owing that 1 out of 3. Okay, so let's check how much is our audit fees. So our audit fees, remember here, it's 69720. So if you say 69720 multiply by 1 divide by 3, let me see. Sorry, let's check what you are given here. They gave you this 69 represents 2, right? So if we say 69720 multiply by 1 divide by 2, it gives you 34,000. So we'll say plus 34,860. Remember, Cremora method says what you are given, you take the amount that you are given, you calculate by, you put the numerator as what you want at the top. So we want 1 out of the 2 that we're given. So if we say 69720 plus 34,860, it's 10458. So we'd have that 10458. Now this 34,860 is owed, so it must be under payables. So we'd say under payables, we'd say plus 34,860. Okay, and then from there you move on. The next, they are saying that increase provision for bad debts by 6,500. So once provision for bad debts increases, it means that provision for bad debts adjustment will be recorded as an expense. So we will go to our information and say under expenses we would have provision for bad debts adjustment. And then remember the buy figure, I said you take it straight to the final box of the income statement. So it means that 24,000 was the old provision. So the new provision now if you say 24,000 plus, because they're saying that they've increased the new provision, it will give you the new provision for bad debt. So 24,000 plus 6.5 gives us 30,500. So this 30,500 must be subtracted in trade and other receivables. So we'll say minus 30,000. I mean, yes, minus 30,500, because provision for bad debts should be subtracted. I hope we are in one spirit. Now, next, they are saying that electronic equipment was donated to a local children's home. Gross profit of 22,400 has been forfeited on this stock had it been sold. The markup on this item was 35%. The bookkeeper has not yet recorded this entry. Now, here what you need to do, you need to remember that this 22,400 represents 35%, right, which is the profit. Now you want the cost price, so you're going to say 22,400 multiplied by 100 over 35. It will give you the cost price. And remember, this is for donations. So if we say 22,400 multiplied by 100 divided by 35, it gives us 64,000. Okay, so under the income statement, we're going to have donations, and then we will say 22,400 multiplied by 100 divided by 35, which gave us 64,000. Remember, this adjustment happened before they took fiscal stock count. So when it comes to fiscal stock count, you will take what is available after they've done the fiscal stock count. Okay, now this also affects our trading stock from the records. So if you check our trading stock from trial balance, according to this, our trading stock from trial balance is 982,400. So if you take that 982,400, you subtract 64,000, it will tell you how much you are expecting. So 982,400 minus 64,000 tells me that I'm expecting 918,400 to be on hand. But when you check here, the fiscal stock on hand adds more, so it means we have trading stock surplus. So I'm going to put it here, trading stock surplus. So we're going to say 982,400 minus 64,000 minus let me check what was the amount there, 923,200. to take minus 923,200. Okay, so let's see, 982,400 minus 64,000, and then also minus 923,200. It gives me 4,800. Okay, then remember, in the balance sheet for inventory, we have to record 923,200. So we have 923,200, and then we're going to say plus. We'll look at what the information says. So the information next says the fiscal stock count on 29 February 2024 revealed the following: trading stock 923,200, stationery used. Once they give you the used one, is the amount for the income statement. So under the income statement, we're going to have, under stationery, we're going to have stationery here, we would have 58,520. So it means you must look for the used amount. So if you say 68,300 minus 58,520, it gives us 9,708. Then this 9,708 is the one that is on hand. So remember, in the balance sheet you add the on hand, so you say plus 9,708. I hope this makes sense. And then next one, they are saying that the rent was increased by 2,700 on 1 July 2023. Remember, our year started on the 1st of March 2023. So they're saying that rent is received 1 month in advance. So remember, from July up until March, it will be July, August, September, October, November, December, January, February, March. So it's 1, 2, 3, 4, 5, 6, 7, 8, 9. So if you say 2,700 multiplied by 9, it will give you the amount of the increased rent. So of the increase of rent. So 2.7 times 9 gives us 24,300. But remember, in the total rent received, the total rent received of 258,000 of 258,300 includes this 24,300. So you must subtract it before you divide by 13 months. So take 258,300 minus 24,300. It gives us 234,000, which we will divide by 13. So 234,000 divided by 13 gives us 18,000. So rent before increase was 18,000. So if you say 18,000 plus 2.7, 18,000 plus 2.7 gives you 20,700, which is the rent, it is the rent after increase. So under rent income, you must subtract 20,700. But remember, this 20,700 you are owing, because you are owing your customers, because your tenant, because he has paid you in advance. So under trade and other payables, we'll say plus 20,700 because we received the rent in advance. Now if you look at this, everything has been, we have recorded everything so far accordingly. Okay, now this one of director's fees, I would prefer to wait because it's a bit tricky. Okay, and then also this one, I would prefer to wait because I know it's problematic. When you do income statement, guys, you need to make sure you deal with the easiest items first. It will make life easy for you. Now the next transaction says that transfer a creditor's debit balance of 3,200 from the creditor's ledger to her account in the debtor's ledger. So now remember, a creditor's debit balance, it means it's a negative balance. So when I take him out, because he has a negative balance in the creditor's control, when I take him out, it means I'm going to add and I'm going to add on the credit side. So it means if I add, then I will credit creditor's control, and then if then I have to debit, it means I'll also add interest and other receivables. So you are going to add both sides. Under receivables we add, under payables we add. Okay, so this side it will be plus 3,200. Under receivables it will be plus 3,200. Then you get your free 4 marks. Okay, then we are done with this. Now next, they are saying that all transactions with respect to the loan were recorded. Interest on the loan is capitalized. A fixed monthly installment including interest was paid in full. The repayment including interest is 402,000. So they gave you how much they pay inclusive of interest. And now they are saying that the capital portion of the repayment will be decreased by 5% over the next financial year. So this helps me to get my current portion and loan. Remember, for you to get the capital portion repayment, you need to take your repayment and subtract interest. So let's check if that information is given here. So now in our balance sheet, for us to get our short-term loan, remember, we are going to take that 402,000, we subtract our interest. You'll get it in the income statement. It has already been recorded, which is 162,000. So you would subtract that 162,000 and then you multiply your answer by 95 over 100, because they said you are going to reduce the capital portion by 5%. So 502 minus 1 162,000, it gives us 240. Then you multiply by 95, divide by 100. Let me see. 402,000 minus 162,000 gives us 240. So 240,000 multiply by 95, divide by 100, it gives us 228,000. So our current portion on loan is 228,000. So it means we can get our loan then. So if we say 1,624,000 minus 228,000, it will tell us that we'll be left with 1,396,000. 1,396,000. Then at least you have gotten some marks here, you see. Now let's go to the next one. They are saying that total dividends for the year amounted to 745,000. Now remember, on the income statement they gave you ordinary share dividends of 260. So it means to get your shareholders for dividends, you are going to say 745,000 minus 260,000, because they gave you the total of paid and declared. So we'll do that. So if we say 745,000 minus 260,000, it gives us 485,000. I hope we're together in this. Now, the next one, they are saying that income tax is still receivable from SARS on 29 February 2024. So in terms of income tax, we are still, SARS owes us. In other words, how do we know that SARS owes us? Let's check. Our provisional payment is 1,812,730. So I'm going to put it here. SARS income tax. So what we paid is 1,812,780. But according to our information, the ones that we got, this tax that we got from the assessment amounts to 1,750,000. So it means I will need to look for the difference. So 1,750,000, and then when we look for the difference, let's see how much we are getting. So if you say 1,812,730, you say minus 1,750,000, it will give you okay, no, let's check something here. Let's check something. So remember, in this case, the tricky part is that SARS, we are being owed, it's receivable, so it can become under payables. So remember, for you to get that, to know how much they actually owe you, if you say 1,812,730 minus what you were supposed to pay, which is 1,750,000, let me see. So 1,812,730 minus 1,750,000, it gives us 62,780. So under receivables, because we are being owed, we'll add plus 62,780. Okay, so always check, am I owed or do I owe? So, and here when you check, we paid more than we were supposed to. Okay, we move on to the next one. So the next transaction, they're saying that total capital employed after all adjustments were processed on 29 February amounts to 16,176,000. Now remember, total capital employed is equals to shareholders' equity plus it is made up of shareholders' equity and long-term loan. So here they are telling us that total capital employed amount to it's 16 million. Let me check. 16,176,000. So if you say 16,176,000, you minus 1,396,000 of the loan, it will tell you how much is our shareholders' equity. Okay, so 16 million 176,000. Then we minus 1,396,000. It gives us 14,780,000. So this simply tells us that our ordinary share capital will be the difference between the two. So to get our ordinary share capital, we're going to say 14,780,000 minus 1,038,000 48. Okay, so let's see. 14,780,000. Then we say minus 1,038,480. It gives us 13,741,520. And this, by the way, was a high order question. Now, when you look at this, we are only left with a transaction on director's fees and the one for interest. So the easiest one we can tackle is our interest. So they're saying in the previous year, the business did not have any financial investments. On 1 May 2023, they invested into a fixed deposit account at 9% interest per annum. The interest is not capitalized and was correctly recorded. So the interest is there in the income statement. Now, if you look at this, on our answer book, fixed deposit, we don't have nothing. But when you go to the income statement under fixed deposit, they have interest income is 94,500. So it means we are going to use that information to get our fixed deposit. So we're going to say 94,500 multiplied by 100 over 9, because they said they invested it at 9%. So now if you count from July, remember, it was invested in May. So if you count from May, June, July, August, September, October, November, December, January, February, it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So it's May, June, July, August, September, October, November, December, January, February. So it's 10 months. Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So it means we're going to multiply this by 12 over 10 so that it can give us the invested amount. So say 94,500 multiplied by 100 divided by 9, and then multiply by 12 divided by 10, which is 1,260,000. This is also a high order question, guys. So now here they're saying that the director's fees includes 385,520, which is the half yearly fees of Mr. Jabu, the sole director at the beginning of the financial year. So remember, these fees, it's for 6 months. Very important for us to note. And then they are saying that an additional director was appointed on the 1st of September 2023, who received the same fee as Mr. Jabu. Directors' fees increased by 8% on the 1st of May 2023, and both directors have been paid their fees for March. So in other words, these two directors have been paid for 13 months. But remember, it means we made 2 payments. So let's check. We will use Jabu's fees to get what we want. So remember, the director's fees increased by 8% in May. So it means for March and April, we were paying Jabu 100%. So it will be 100 multiplied by 2, which will give us 200. And then from there, Jabu from May up until August. I think it's May, June, July, August. Yes, because it's supposed to be 6 months. He was receiving 108%. So we'll multiply it by 4. Okay. So 108 multiplied by 4 gives us 432. And then when we add the 200 plus 432 gives us 630. 32. So now remember, we want only the amount for March. But in March, remember, we made 2 payments, right? So it means we're going to say 108 times 2 is 216. So we're going to say 216 divided by 632 times that director's fees amount, which is 385,520. So we'll multiply by 685,520, and then it will give us the amount that was prepaid. So we will say 216 divided by 632 multiply by 685,520. Let me see. Oh, 385, sorry. It's 3. So 216 divided by 632 multiply by 385. Let me see. What's that? 385,520. Yes, 385,520. So 385,520 multiply by 216 divide by 632, which gives us 131,760. But remember, this amount was prepaid. So in the income statement, we will say minus in director's fees. We're going to say minus 131,760, and then in the balance sheet this will have to be added. So under trade and other receivables, so we'll say plus 131,760. Okay, I hope this makes sense. Now when I check all adjustments, everything has now been recorded. So what we need to do is close up our things. So we can start with the ones that is the easiest to close. I think in this case it will be our income statement. So in this case we need to close our income statement. So if we say 1,307,840, then we say minus 131,760 is going to give us 1,176,008. Let me just confirm. Director's fees amount at 1,307,840. Okay, so that amount is fine. Now if you look at this, the income statement, we just need to get our rent. Then so our rent 258,300, then we minus 20,700. It gives us 237,600. Let me check. 258,300, I subtract 20,700, it gives us 237,000 337,600. And then from there, so with our income statement, we just need to get our operating expenses because they did not bold that. So it means we have to check it. So you take this to subtract your gross operating income from operating profit. So 10,711,800. I'm gonna write it here. 10,711,800. I subtract 631,700. 631,700. Okay, let's see. So 10,711,800, and then we subtract 6,317,500, which gives us 4,394,300. Okay, then we are done with our income statement. We need to close up our inventory. So let's start with our inventory. Our inventory says 923,200 plus 9,708. It gives us so 923,200 plus 9,780. It gives us 93298. 93298. And then our cash and cash equivalents, trade and other receivables 480,390 minus 30,500, and then plus 3.2 plus 3.2 plus 62730 plus 62730, and then plus 131,760. It gives us 64758. 64758. Then let's check how much will be our cash and cash equivalents. We take it and we subtract the two items. So 3,429,700. So you need to write it in brackets. 3,429,700. You minus 932,980. Then you also subtract 64758. Okay, just so that you can end part marks should you make mistakes. So 3,429,700. We subtract 932,980, and then we also subtract 64758. It gives us 1,849,140. Then we are done with that part, and then from there we need to close up our trade and other payables. So let's see, 1,024,565 plus 34860, and then also plus 20,700 plus 20,700, and then plus 3.2. It gives us 1,083,325. So okay, that's fine. We will add what we have. So I'm going to add 1,024,565 plus 34,860 plus 20,700, and then plus 3.2 gives us 1,083,325. So I'm going to add these three items so that we can get our total liability. So 1,083,325 plus 228,000, and then also plus 485,000. It gives us 1,796,325. So guys, if you want me to help you to prepare for examinations, you can call me on 073 036 3208, and I'll be more than happy to help you to prepare for your paper 1 and paper 2 exam. Our package for both papers is only 500. So please make sure that you get in touch with us so that we can help you to get your the results of your dreams. Now remember, I want to show you something. We were supposed to complete this in about, I want to check the time. Remember, here for me, I'm explaining we are supposed to take 45 minutes, but if you look at the records, it says that we finished at 39 minutes. Okay, so it means that time management, guys, we are very good at it, and we can also help you to prepare for that. So please, guys, don't forget to call us so that we can help you to prepare for your examination from just only 500 for both papers. Thank you so much, guys. for watching. I hope this will help you to get better results in your dream in your preparatory exam. Thank you. God bless you. Shalom.